Trading has changed. A few years ago, everybody wanted to trade Forex. Now, everything has transitioned into futures. Tops have legacy funded futures and a wave of funded programs giving traders access to some serious capital. But here's the problem that nobody talks about. The rules on these futures evaluations are much harder. Smaller drawdowns, tighter trailing limits, and less room for error. You can't afford 20 tick stops, you can't afford random drawdowns, and you definitely can't afford fakeouts. So I had to adapt. I built a strategy specifically for futures prop firms, designed for tight stop losses, precision entries, high time frame narrative, and avoiding the fake moves that blow evaluations. And in this video, I'm breaking down the entire model from top to bottom. If you're serious about passing evals and staying funded, watch this whole thing because it only works when you understand how all the pieces connect. What's going on, guys? It's Marky, and in today's video I'm walking you through my complete futures trading framework, the exact model that I use in today's prop firm environment. We're going to cover time frame alignment for narrative, why the highest time frame imbalance matters most, session timing in Pacific Standard Time, the tap into significant areas, and my 1 minute IFEG execution model. And later in this video I'll also explain how some of my students are bypassing evaluations entirely. But first, we need to start from the foundation, so part 1 is going to be time frame alignment. The biggest mistake future traders make is starting on the 1 minute time frame. The lower time frame execution model only consists of a few things. It could be a fair value gap, an inverse fair value gap, it can be a liquidity sweep, or it can even be an order block. But what matters most is the actual narrative. Where is it gravitating towards? Execution comes last, narrative comes first. I start by asking where price is drawing to, and that's when I go up to the 4 hour, the daily, the weekly time frame, and I actually identify one of these key levels. It could first of all be a FVG. Second of all, it can be an IFEG. Third thing, it could be a potential immediate rebalance, which is something that you shouldn't necessarily aim for, but if you see it potentially happening nearby, that's when you can actually react to it if you see it happen. It could be a major zone of liquidity that gets taken out, like a previous week or previous day high or low. It can be session liquidity, and all of these things consist of your narrative. You have to find these things on the higher time frame before you scale down to the lower time frame. And another point I wanted to make is the higher the time frame gap, the more significant it is. A daily imbalance means more than a 15-minute imbalance. You should think about in terms of the actual time frame. If you're thinking of a 15-minute time frame, it's likely going to react within the next 15 to 45 minutes. 3 candles can push up out of it, and that's the most that a 15-minute time frame will do for you. The daily time frame revolves around the entire daily candle, which consists of the entire 23 hours that a daily candle is open. A 4-hour gap carries more weight than a 5-minute gap. So identify the highest time frame inefficiency price has yet to deliver to. So it has not been filled, and that becomes the draw of liquidity. Now we have direction, now we have narrative, but without that, nothing matters. Part 2 is going to be focused on session timing. The strategy is session dependent because volume actually matters in futures. Here are the key kill zones that you need to memorize in PST. So for Asia session, it's going to start at 5 p.m. and run until 12 a.m. Pacific Standard Time. I typically trade Asia session at 7 p.m. That's when we get a new 4-hour candle. London session is 12 a.m. to 3 a.m. Pacific Standard Time. New York session starts at 6:30 a.m. and goes until 9:30 a.m. And then we have the PM session in New York, starting from after lunch hour from 1 to 3 p.m. And then market obviously closes, we get a new daily candle. But these are the 3 main kill zones that you're going to need to focus on if you're trying to trade a high probability strategy. Kill zones aren't exactly how long the sessions are. Like for example, London session actually starts at 11 p.m. PST, but 12 a.m. is when the silver bullet starts. Similarly to New York session, we typically get that New York opening volatility during this time, but New York session is a lot longer. If price taps a significant higher time frame level at 1 p.m., then I'm not interested in the trade. It's too late in the PM session and market's coming to a close. But if price delivers into a 4-hour imbalance at 6:45 a.m. PST during that New York open, now I'm paying attention. Time and location both must align, and this is where most traders force trades outside of the volatility window. Now, part 3 is the significant taps. So once we have that higher time frame draw, session timing, then we look for price to approach a significant imbalance. I wait for the tap. I don't anticipate and I don't front run it. Price must actually deliver into that area. Liquidity will get swept, imbalance will get tapped, premium or discount gets reached, and then and only then am I going to drop to the 1 minute, and that's when the execution model actually activates. Part 4 is going to be the actual entry model, and this revolves around the 1 minute IFEG. The execution model is built around inverse fair value gaps on the 1 minute time frame. So here's the sequence. First, a significant higher time frame area is tapped. Second, you want to see that liquidity, which means highs or lows get taken and that sweep occurs. Third is going to be displacement on the 1 minute. Now, this isn't displacement towards your narrative, it's displacement in general. It can be in the opposite direction. And if a fair value gap forms in this displacement and you see price then trades back through it, which is step 5, price trades back through it, creating an IFEG, that's when the structure shifts and the IFEG becomes a level, and the structure shift is your confirmation. You want to enter on the mitigation into the IFEG. So let me show you what this looks like in the charts real quick. Here's an example from yesterday's price action. You can see that this is where we were looking for a trade inside of Asia session. But the lesson is you don't go off of the first close over the IFEG. Typically, you wait for it to mitigate back into the IFEG. This will also show you that it's respecting the IFEG. And this is when the real move will happen. You can see that even though we closed above it and got that initial move, the real move only happened after we actually came back into the IFEG, mitigated it, and that's when we actually expanded all the way towards those daily targets that we were looking for yesterday. So your entry is going to be on the mitigation into the IFEG after your confirmation. Your stop loss is going to go just beyond the short-term swing. This keeps the stops extremely tight, and that's critical for futures prop firms because when you're working with tighter drawdowns, you're also going to want to have tighter stop losses. You're going to want to have better risk management. You need precision, not hope. Now, part 5 is going to be on how this actually helps you avoid the fake out moves. Fake outs happen when traders either trade in the middle of the range, ignore the higher time frame gaps, enter before the session actually starts. That's a big mistake I see a lot of people. They start over trading and eventually it's no longer a high probability time to be trading. And then they trade in this mid-session area and just get consolidated, chopped up, and blow their accounts. Then they also skip that displacement confirmation. If you don't get displacement, and this doesn't mean towards your narrative, as I mentioned, it's actually better if we get displacement against your narrative and we create a fair value gap, then we disrespect the fair value gap. That will actually give you a high probability market structure shift. This model filters all of that, and if it doesn't align across timeframes, I simply don't trade it. That's simple. And that discipline alone drastically increases the evaluation pass rates. Now let's talk about something real. If you're struggling to pass your evaluations, it's actually not because you're a bad trader. It's because your trading strategy isn't actually built for prop firms. And so if you're struggling to get past that evaluation phase, shoot me a DM, because if you're willing to pay a little bit more, I can get you instantly funded through legacy funded futures, which means you pay a little bit more, but you start working on your payout from day one, which helps a lot of traders because they never have to get past that evaluation phase, which is where most of them get stuck. It's called eval jail, and I'm sure you guys have been there, and some of you guys are there right now. So if you guys have the money, you're going to spend it anyways trying to pass the evaluations. If you want more information on that, just shoot me a DM and I'll set you guys up. And then if you guys want help applying this full framework that I went over in this video, you can apply to work one-on-one with me. That's where I help traders refine their narrative, clean up entries, fix your risk management, and build your consistency. The application link is going to be down below in the description. And let me show you what I typically cover in my one-on-one mentorship. So typically we work on the milestones of passing the funded account, getting the first payout, depositing into a live account, working on payouts with a live account, and eventually making that 10K a month from both prop firms and a live account. Now, when it comes to joining me in this mentorship, you're also going to get a full 3-hour breakdown of all the concepts and models that I trade, which is located on the Zero to Market Engineer section of the WAP. There's also going to be a live trading community, and this is a one-on-one mentorship, so I'm personally going to be trading with you. The same kind of live trading that you see from me in Legacy Funded Futures, that's the same kind of live trading that I do with my one-on-one students. So if you want to invest in yourself and learn this entire framework at a pace that's built directly for you, then hit that link in my description. That is what a successful framework looks like for a futures trading strategy. Remember, on futures, you have much less drawdown, so you're going to have to be a lot more precise, and you're going to actually want to have your strategy dialed in. So if you want to master this framework for free, then just join me every single day for my Asia live streams. With that being said, comment strategy if you want to see more videos like this, and I'll see you guys in the next one. Peace.